Aloha, everybody. Monday's stock market session was kind of a wild one. Overall, world markets swooned following the weekend events of Russia invading the Ukraine. And that didn't go over well, obviously, in world markets, but especially in Russia's stock market, with it being at one point, I guess, down almost 10% intraday. But overall, our markets did relatively well on the day when you look at just the indexes on a standalone basis. The NASDAQ gapped down but was able to hold the lows, had a nice intraday reversal off the bottom to close actually very close to near the high of the day. Volume was above average, but sadly it was lower than the session before. The New York Stock Exchange is a similar situation, but it did close lower than where it opened. The S&P 500, its doppelganger, actually did the exact same thing. Dow Jones Industrial Average, you can see a little bit weaker on the day, down 0.94%. It's still above the 50-day moving average, but it's barely holding on. But this is the weakest of the indexes, so I really don't care that much. But overall, the most important thing is the Russell 2000 held up relatively well. Nice intraday reversal, just like the NASDAQ, closing higher than where it did open. But despite the action in the indexes, even though it was basically pretty constructive overall, I just see too many issues now that's actually got my red flags waving all over the place. Like you saw on Friday, biotechs got hit. I warned that if solars were going to follow, I would start to get really, really nervous. And today, we did start to see it on a very small basis. JKS had earnings, as I was notified about this weekend, took the heat of the call, dropped the 2% signal down to 1%. And if it gapped up, I thought it would be stronger. Volume wasn't big enough on the gap up, so it was only 1%. Good thing, because it reversed, closing below the open of the Friday session, which is not good, and on even heavier volume. So JKS is a full sell. But that follows the recent action of FSLR, which gapped down, rallied, and now appears it wants to roll over again. TSL, you can see, just reversed its recent breakout, and one of the only ones holding up right now is SPWR, and to be honest with you, it doesn't look that bullish. So, the solars aren't bad yet, but they are following through with that weak action out of the biotech stocks. And even though the biotech stocks were down slightly today, volume was still heavy on the BIB and the IBB. The BIS, the inverse way, or actually, I guess you could call it the ultra short position of the biotechnology stocks. You can see heaviest volume ever the session before on Friday, and today the heaviest volume ever now. So back-to-back days of all-time record volume. So there could be somebody starting to hedge their position in the biotech sectors. It's been on a tear from 2013 to now. And all that being said, it doesn't look good. And when you look at all these things starting to happen, then you start to see defensive industries everywhere, like utilities. Whoops, I thought that might be a utility index. I don't know it offhand, so let's see if we can't find one together. Utility, we'll use the Philadelphia Utility Sector Index, UTXY. You can see lately that while the market hasn't done particularly that great in 2014, utility stocks are doing well. You can see that crude oil got a big bump today, along with gold and silver. And on top of that, coffee continues to just be exponentially on fire. Since the breakout, the gap up, when it looked like that you were chasing coffee back on February the 3rd, despite it looking too expensive then, if you would have bought it at the end of February the 3rd, coffee is up 46% in just 1 month. That is one of the biggest moves ever in 1 month for coffee. And if you look at the commodity index, you can see that thing has been on an absolute tear from its 2014 lows, up 16%. So we can either look at this two ways. Either we're going into defensive positions because we're looking at a weakening economy, and or we're about to really start to see all that quantitative easing really start to flood into the market with massive inflation. If we have massive inflation coming around the corner, then I assume that the market will find our lows here and we'll begin to rally higher. But until then, we'll have to wait to see. ALXN is at 25% sell with it closing below the 20-day moving average. PRIS has reversed that viable gap, not the viable gap, but the gap up. So I'm going to take off 50%. It's still holding with a low a day. Lock is closing below the low a day of the initial 20-day moving average violation on February 24th, so that's going to be a 25% sell. And Juniper is still consolidating, but I'm getting sick and tired of this damn thing not doing anything, so I'm going to go ahead and take off half of that position. And as we went over, JKS is a full sell. DHT is giving an add signal tonight. Very nice pocket pivot point buy signal off 50-day moving average. Be a 2% signal if we were in a good uptrend, but I have enough problems that I see out there that I want to keep this small, so only be a 1% add. And Track, which would normally be a 2% add as a high-quality CanSlim stock, is only going to be a 1.5% add because the market is just looking like we really don't want to rally that much higher. Now, I hope I'm wrong, and I hope we go to new highs, but let's say that we don't. Let's say that this market reverses. If we can get a low-a-day close in any of the sessions coming up, I don't care if we're up 1% and then we're only up 0.2% if we're closing at the low a day, I will begin another round of hedging in either SRTY, SDOW, SQQQ, or SPXU, whichever is lagging the market the most.